Good afternoon, good afternoon, good afternoon. We're going to be joined by a successful entrepreneur. His name is Greg Dickerson. So stay tuned. Hey, Greg, how you doing?
Good. How's it going, Arthur?
Oh, I'm doing great. It's getting better each and every single day.
Awesome. Awesome.
All righty. Where you calling in from?
I am in Charlottesville, Virginia. How about you?
Uh, Philadelphia, Pennsylvania.
Oh, yeah, man.
Can you see me good?
Yeah, I can. We got a little delay here and there, but we're doing okay.
Okay. How is it now?
It's good.
Okay. 'Cause I can see you pretty good.
Okay.
All righty. Yes, I'm looking forward to you conveying value to my audience about the power of real estate investing and real estate development. And I told a great friend of mine about you, and he went to your website and he was blown away by what you're doing in the entrepreneurial space, especially in the real estate development side. And his name is Gordon, and he specializes in the private equity sector. So he wanted to see if y'all can, do a conference call and see how y'all can create value for one another.
Yeah, yeah. Feel free to set it up. I'd love to chat with him, see what he's looking to do.
Okay. All right. I would definitely let him know after we finish the show.
All right.
All righty. Ready to rock and roll?
I'm ready.
All righty. Here we go. Good afternoon, everyone. This is Arthur Robinson Jr. I'm the creator and host of the Powerful Interviews podcast. And today I have another special interview for each and every one of you. Today I have a wonderful person on the show, and he's a great friend of mine. His name is Greg Dickerson. For those that don't know Greg, let me explain to each and every one of you about this incredible, phenomenal man. Greg Dickerson, he is the founder and CEO of Dickerson International. He is a successful entrepreneur, real estate developer, a real estate coach, and he actually bought and sold over $250 million worth of real estate. And he is a developer by trade, and that is an awesome, impressive resume. Without further ado, I'd like to welcome the one, the only, the powerful Greg Dickerson to the show.
Hey, Arthur. Thank you for having me. It's great to be here.
I'd like to thank you, Greg, for taking time out of your busy schedule to educate me and the audience worldwide about the power of real estate development and the power of real estate investing. I gladly appreciate it.
Yeah, well, after that introduction, man, I got to light it up.
To everyone that's listening and watching right now, I highly recommend go and get your pen and your pad right now. My great friend Greg Dickerson is going to break down layman's terms about the power of real estate investing. And we're going to talk about the power of real estate development. Is that correct, Greg?
Yeah, yeah. Whatever you want.
Well, I'd like to know, and can you explain to the audience in layman's terms, who is the phenomenal Greg Dickerson? How long you been in your powerful industry? And what is your expertise?
So, for everybody listening, I started from scratch. I graduated high school, did not go to college. I went in the Navy right out of high school. So, I've learned everything from the ground up the hard way. I did retail in the Navy, had some business training after the Navy. I did two things, restaurants and construction. So, I was literally out swinging a hammer, busting up concrete, loading wheelbarrows, hauling lumber as a laborer, and worked my way up. At the same time, I was working nights in restaurants, working my way up into management there. And ultimately got into restaurant management where I received some really great business training. You know, restaurants are all about the numbers, all about budgets, all about leadership, delegation, motivation, management. And then I always had a little construction side business during the day while I worked in restaurants at night. And then in 1997, I decided to step out on my own and start my own full-time business. I wanted to open a restaurant, but I got into construction instead. I started a little remodeling handyman company. And again, I started, from nothing with nothing. Nobody in my family were entrepreneurs. I had no money, no formal education, no training. I had some skills. So I went out and started doing some handyman remodeling work. I did 250,000 my first year. 7 years later, I'd built that into a $35 million company. I sold it. And along the way, I started 12 other businesses, grew those, scaled those, sold them off, all kinds of different businesses. And I reinvested all the profits back into real estate. And that's where that 250 million you're talking about, those are deals I did with my own money
Mm.
that I generated from all my companies along the way. I've done, 400 or 500 million in deals with investor capital, bank financing, things like that. But the 250, that was just me, my own capital, using profits from the businesses. And then, I've done 400 or 500 million in equity capital with companies. And I continue to do those things today. I do real estate development deals, I do equity capital deals, and I coach and mentor people all over the world doing all kinds of different things. But it all started back in 1997 from scratch with absolutely no money, no backing, no nothing. I just used credit cards, and I worked using my hands, my skills, and I reinvested into myself and into real estate along the way, and just grew the projects and types of projects I was doing, and grew my businesses and scaled those. And but more importantly than that, I became a leader, delegator, motivator, and everything I did was through others, with others, for the benefit of all of us. So that's kind of me in a nutshell.
Mm. Now, you do a lot of syndication acquisitions in regards to real estate investing. Can you explain to the audience about real estate acquisition versus equity deals?
Well, so real estate syndication is a form of private equity. So basically, what syndication is pooling resources to do bigger deals than you can do yourself. And resources can be capital, it can be talents, it can be assets, it can be a number of things. You're just pooling generally capital from a multiple of investors to do bigger deals, which is basically private equity. Now, when you say equity capital as a discipline, that's generally, there is real estate private equity, but then there's equity capital where you go and you raise capital to buy companies, and you can, scale companies. You can break companies up and sell them off. You can roll up companies. So there's a couple of different ways to do it. But real estate private equity is basically alternative asset investing where you pool investor capital to go do real estate deals.
Mm. Now, you mentioned that powerful word REIT, real estate investment trust, but with people that are involved in that type of investing, you don't actually control the real estate investment trust. Would that be accurate?
Yeah, so REIT's different. That's just you're buying, that's a real estate investment trust. So that's a stock offering. That's a company that sells stocks on the exchange. So yeah, you just own shares in a company that owns, all kinds of assets. It could be a mall, like a lot of the shopping malls in the country are owned by REITs. Apartment buildings can be owned by REITs, and then office. They generally will specialize in one type of asset, and sometimes even a certain class of the asset, A, B, C, D. So there's a difference between a REIT and private equity and syndication. They're all three a little bit different.
Mm. Now, you are basically a developer by trade. And I know over a period of time you developed that mindset. Can you explain to the audience in layman's terms so the audience fully understand? For the entrepreneurs and active real estate investors that want to get involved in real estate development, now, what would be the differentiator from a man or a woman that has actually have a real estate license and they want to be a real estate developer? Because the real estate developers, they actually orchestrate the deal and then they get a piece of the action. Would that be accurate?
Well, so real estate developer is the entrepreneur behind the idea. So a real estate developer is somebody who brings all of the resources together to get a deal done. So you're generally going to be the one that's identifying a property. You determine the highest and best use of the property. You bring the team together to execute on the vision. You arrange the financing. You control the deal. So the real estate developer, they don't get a piece of the deal; they own the deal. And
Mm.
then they determine in terms of all of the other interests in the deal, if there's partners, investors, whatever, who gets what. The real estate developer is also known as a sponsor. So that's who's sponsoring the deal and raising the capital, putting everything together. Now, as far as licenses go, so you have real estate agents that are licensees. There's no license required to be a real estate developer. And there's all types of development. So flipping a house, buying a house, renovating it, and selling it, that's a form of real estate development. You're developing the property, you're improving the property. And, so there's opportunistic, which is heavy lift, value add kind of stuff where you're renovating properties. Then there's ground up development where you're just building from scratch. There's redevelopment where you tear something down and build up. So there's all kinds of forms of development, but a lot of people don't think like house flipping is real estate development. That actually is a form of real estate development. But what most people think of is they think of big buildings, ground up, but it can be anything. It can be building houses. It can be renovating buildings. It can be developing land where you buy a parcel of land, you break it up into lots and subdivide that, sell it off. So there's a lot of different forms of real estate development, but none of it requires a license. Real estate agency, buying and acting as an agent on behalf of others that are buying and selling property for a fee, that requires licensure in a lot of states. Some states, what is known as wholesaling, which is really flipping a contract is what wholesale real estate is. Some states are requiring licenses to do that because you're sort of acting almost like an agent, except for when you have a property under contract, you have equitable interest, equitable rights in that property. You own the contract, so you have the right to assign that contract. But some states are cracking down on that because people are crossing the line with that stuff. But to be a builder, you need a license in some states you don't. But to be a developer, anybody can do that because generally you're going to hire a licensed general contractor to do the work for you, or licensed contractors if it's land development to do that work for you and do the infrastructure and things like that. So it comes in a lot of forms and fashions, but at the end of the day, you're a visionary, you're a leader, you're a delegator, you're a motivator. You raise the capital, you create the vision, you determine the highest and best use, you bring everybody together to execute on the vision and the highest best use of the property. That's what developers do.
Now you was talking about, wholesaling, and I know people that actually, they do wholesale a lot of real estate. Now, when you wholesale in real estate, don't you have to pay, a capital gain tax for every property that's sold?
Yeah, so wholesaling is a transactional business. So it's not necessarily a capital gains because you're selling a contract, you're assigning a contract. So you're going to, depending on how your business is structured, you're not actually buying and selling real estate unless you do a double close. If you're just assigning the contract for a fee, that's just ordinary income. That's not a capital gain. Now, if you're actually taking title to the property and then conveying it, that can trigger a capital gain. But if you're classified as a dealer and you have inventory, then you can run it through your company and then it's just ordinary income.
Wow. Now, for the entrepreneurs and business owners that are listening and watching right now, where they're basically wanting to move forward with becoming a real estate developer, what advice would you give them for people that are really serious about becoming a real estate developer?
So you have to invest in yourself. You have to invest in your education. That's part of what I do. I teach people how to get into real estate development. I have courses. I coach people. There's other resources out there with the National Association of Home Builders, the Urban Land Institute. So there's a lot of resources where you can start learning about real estate development and what it is. But there's not very much out there that'll teach you to actually how to be an entrepreneur and start a business as real estate development. So that's what I do. And I've created that school of entrepreneurship, Dickerson International, to help people with that, among other things. But it all starts with education. You have to know the market, you have to know the business, you have to know the type of assets, you have to know the classes of assets, you have to know the regulatory environment that you're facing in terms of getting projects approved. You have to understand the economics of the deal and the business model. You don't really need serious technical experience from the building side. You can hire builders to do that work for you, but you really need to understand the finance, the economics, the market, the fundamentals, what it's going to take from a regulatory standpoint. In other words, how to get permits, how to get projects approved. You need to understand what is going to be required to develop a property from access, utilities, lot coverages, height restrictions, things like that. So you have to kind of become an expert in the zoning codes and the uses that are allowed for the different properties and the different zonings, so that you can take a quick look at something without having to hire an engineer or somebody and spend a bunch of money, and understand what you can do with that property. And then, but even on the real technical side, you're hiring engineers to do all that. But that's really your highest and best use of your time as a real estate developer. Number one, finance. Number two, understanding zoning, and how to maximize the density, which ultimately maximizes the value of the property, and then understanding how to vet the right team and professionals to bring them together to manage everything for you. So it's all about education.
Wow. I always say your greatest expense is what you don't know. And what you don't know can actually hurt you in any type of industry that you decide to get into, especially with real estate development. Now,
Well, so that's one. Yeah, what you don't know can be very punitive, but the most expensive mistake and the most damaging mistake is what you don't know, but you think to be true that's
mm,
wrong. So what
mm,
you think to be true that's wrong is more um, expensive in terms of mistakes than what you don't know. That's where people mess up. People think they know, but they don't.
mm,
That is the worst. If you don't
mm,
know, you just ask questions, right? And you find the right
mm,
people. But if you think you know and you don't, that's when you mess up, because you move forward on that information, not knowing what you don't know. And that's what gets you.
mm. Yes, you have to develop, a proper understanding about, what you're doing, and then, develop that right team that'll help you build the dream and then execute it. So it's good to learn from people who's been there, done that, and who's still relevant in their current industries.
So it's leadership in terms of understanding where the people in the chain are from a development standpoint. So if you're leading, growing, developing people, you have four different levels of individuals, right? You have the first level, which is you don't know and you don't know. So that's the safest level, because that's where you don't know. So you're going to ask questions, you're going to get people that have the answers. Then you have, but you're afraid to use it, right? So how many people are in analysis paralysis? They have the knowledge, they have maybe even the ability and training, but they don't take action. They're afraid to actually take that step, take that action, pull the trigger and commit. Then you have the most dangerous phase, which is what I just talked about, is where you think you know, but you don't, because that's somebody who's going to take action on what they think they know to be true that's not. That's the most dangerous phase that people go through in their development of expertise. And then when you've arrived is and then that's when all doors are open to you.
Mm, yes, absolutely. There's a lot of people, they absorb, a lot of outside the box education, but then, like you said, analysis paralysis is like theory thinking. They have it in their brain, but then they don't execute it. So you don't know if it will actually work for you if you don't implement what you learn.
Got to take
Greg,
action. That's where the rubber meets the road.
absolutely. I agree with you. Greg, can you explain to the audience in layman's terms what is the best advice that you have ever received?
For me, probably, I mean, gosh, there's so much, probably number one is invest in yourself. That was the best advice that I've ever received, is to invest in myself. And probably other than that is to um, understand where other people are coming from first. So that's empathy, right? Put yourself in the other person's position first, seek first to understand, seek first to serve others, and then everything else will come. And, one of my favorites is Zig Ziglar. If you help enough other people get what they want, you'll ultimately get what you want, not in a manipulative way,
Mhm.
but in a very sincere way of caring about other people, helping other people be successful. If you pour into other people, everything that you're after will come to fruition. So, those are kind of all sort of the same thing.
Mm, I agree. You know, uh, I love providing, value to people, and I love, providing hope to people, and hope stands for helping other people excel. So, once you develop that mindset, you're going to be in business for a long, long time, and you're around that right energy. Let's have a conversation about money. Now, I know money is not value. Money is just a facilitator to do transactions. Can you explain to the audience, how would you define money?
It's just a mechanism for keeping score in the game of business. I mean, that's really all it is. It's a means to an end. It can provide things. You need money, right? We're in a monetary system, so you need money to survive, number one. So there's a basic need. Then there are the things that money can supply that are the luxuries above the basic necessities. And then when it comes to high level of business, it's just how you keep score.
Hmm. So would you say that money is the
And then
byproduct?
where, with great wealth comes great responsibility. So it's also, money gives you the ability to impact, and to do some really good things as well.
Mhm. You said money gives you the ability to impact. So would you say that money is the byproduct of the value that you uncover?
Yeah, I mean it's a means of measuring your value in the marketplace. So the bigger problem you solve, the bigger opportunity is created, which usually equates into from a value exchange standpoint, money. So if you have a business idea, you have to think about what can I exchange this idea for in terms of value. And right now, our system is monetary. It's the dollar-based system. So you're exchanging value for dollars. You're exchanging something that's valuable. And in any economic system, that works. I mean, if you don't have money, you're exchanging something. If somebody's living in a house that you own, they're going to give you something in exchange for that. Back in the day, it was, sharecropping and, things like that. And then, there was trade of spices and goods and services in exchange for other things. So it's all a barter system at the end of the day. Right now, it's about the dollar in this world. And, so that's what you're doing is it's a measure of the value you're providing to the marketplace and the problem that you're solving.
Mm. Greg, let's have a conversation about cap rates. Now I know capitalization rate, that's just a formula for yielding money. So can you explain to the audience for the entrepreneurs that are actually into apartment investing, the lower the cap rate is, the higher the purchase price will be, but the higher the cap rate is, the lower the purchase price would be. So, so should entrepreneurs and business owners really just focus on the cap rates when they're actually getting involved with apartment investing?
No, I mean, so cap rate is defined by a lot of people in a lot of different ways. At the end of the day, it is what a cap rate represents is return on capital invested. So if you paid cash for a property, if you paid $1 million for a property and it had a 5% cap rate, that means that the net income on that property should be $50,000 a year. That at the end of the day is what a cap rate is. It's a net operating income divided by the purchase price. So it represents an unlevered return on a performing stabilized asset. So where cap rates get into trouble, and you should never look at the cap rate in terms of deciding whether or not you're going to make an investment, depending on the asset. Cap rates are a sentiment of value in the market. So certain assets in certain markets, will trade at certain cap rates. Like you're in Philadelphia. So if you're looking at Class A multifamily properties in Philadelphia of 2 to 400 units, they're probably going to trade at a 4.5 to 5 cap, somewhere around there. If you move into the city proper and you're looking at Class A, high rises, they might trade at a 3 cap. If you move out to the suburbs and you're looking at garden style, older Class C, B, C product, it might trade at a 5 or 6 cap, depending on the market. So it's kind of a means of conveying the value from a sentiment in terms of the marketplace. It's what appraisers use to value properties. It's what investors use to make decisions. But cap rates are only as good as the income on the property in terms of looking at it from an actual basis. Because again, if a building is vacant, it's not producing any income, you can't really put a cap rate on that because there's no income. Cap rate is an income-based calculation that can be relative to, all kinds of things, the condition of the property, the income that's coming in, those types of things. But at the end of the day, commercial properties trade on a multiple of the income that it's generating, net operating income, meaning you take all of your expenses, you have your income, you subtract all your expenses before debt service and divide that by the purchase price, and that gives you a cap rate. Or you can do, the income divided by the cap rate, and that will give you a value of the asset in a market. If you know the cap rate, but you don't know the value, you just take the income divided by the cap rate, and that gives you the value. So that's really all it is. And it's really funny. It's a very confusing thing across the market, but unless you're looking at a stabilized asset, which is what you would call a core asset, that there's very little value add. It's just a stabilized bond kind of a play. You're looking for an income play. Then you can look at cap rates. So if you say, hey, I want to earn 5% of my money, then you can look at cap rates, and that's what that represents if you were paying cash. If you're levering the asset, in other words, if you're borrowing money, your cash on cash is based on your down payment. So, at the end of the day, it boils down to what kind of return are you looking for on your cash that you have to invest? What is your upside in the property, and what is your long-term strategy? And what are you willing to do? Do you want something you have to put a lot of effort and money and time and energy into, or do you want something that's stabilized? You don't have to do anything and it just generates consistent income. So that's kind of how that works.
Mm. Um, you talked about, basically, income producing assets in regards to, apartment investing. And real estate is basically, long-term wealth versus monetary wealth. Now, when you increase your NOI, your net operating income, you will increase the value to that commercial apartment. Would that be accurate?
Yeah, or any commercial property. So, all types, offices, retail centers, everything. Yeah. So, and depending on the cap rate, you can do the math real quick. If you increase a property by $100,000 a year at a five cap, yeah, it's $5 million. You're adding value to that property.
Mm.
So that's where it gets exponential in terms of larger assets. You don't really need to move the needle much on the net income to really increase the value of that asset. And you can look at it for every $100 a month that you increase the value of a property, you can divide that out and get little ratios, and it really dramatically affects the value of the properties.
Now, for active real estate investors that are in, the apartment investing arena, is it good for them to look at, strictly the cash flow and also, to get a copy of the rent roll statement in regards to, the purchase price of the value of the apartment so they can determine what the value really is instead of they going on, made up numbers like performer numbers?
Yeah, generally, a seller is going to have the financials packaged together when they're selling an asset, so that you should have all that. It's going to show the P&L. It's going to, rent roll. It's going to show it's called a T12, the trailing 12 months of expenses. You also have the T1 trailing, 1 month. So you want to get as much financial history on the property as you can, tax returns, P&L, the T12, the rent rolls, all that kind of stuff. And you want to vet the operating costs, in terms of the, maintenance, utilities, things like that, and make sure that you do your due diligence and just make sure that those expenses are in line. And if you're not quite sure how to do that, you can get management companies that are going to manage the asset for you, and they'll help you go through all that. They'll audit your leases, they'll audit the numbers, they'll look at the pro forma. You don't want to rely on a pro forma from a broker. You want to rely on the actual T12 from the property. And you want to get as much history as you can, but at a very minimum, you need the T12, the T6, T1, and during pandemic, you needed to really look at things on a weekly basis, because things could change from an occupancy level, that quick. Then you need to really verify that they're actually collecting the money they say they're collecting. So you want bank statements, tax returns, all that kind of stuff, so you can reconcile the dollars. And then you, even beyond that, once you decide, hey, this looks good, you make an offer, it's under contract, you start doing your due diligence and walking the property. You have to go through all the units, to verify that the units are occupied or vacant and in working order as represented. And you do all your inspections and all that too. But that's the process of due diligence. Checking all your dotting all your I's, crossing all your T's, and making sure that everything that the seller represented and the broker represented is true. But it's on you to do it. It's called caveat emptor, buyer beware.
Mm. Wow. Um, Greg, that was some powerful information that you just conveyed to the audience. I really appreciate it. Now, for the entrepreneurs
That's
and
years of experience getting hit the hard way.
I could tell. I could definitely tell by the knowledge base that you're revealing to me and the audience. Greg, for the accredited investors that are actually in, the apartment complex arena, is it good for them to basically, look at um, the overall picture in a nutshell in terms of people want to build up their asset portfolio or build up their asset column? I know entrepreneurs, they went from, starting out as single family homes and then they basically got into apartment investing. But is it good to invest in an apartment building that has a good subdivision in that particular area?
Yeah, so it's really up to the individual. There's a couple of ways to do it. One is you can be an active sponsor investor, or you can invest passively. So if you're an accredited investor, you'll qualify for certain investments in different types of opportunities that are syndicated, where you have a sponsor who identifies the opportunity, then raises capital from qualified investors to invest with them in the deal. And it's all about economies of scale. So the reason multifamily is so attractive is because you have lots of economy of scale. You can scale your portfolio, your income, your net income faster because they're larger assets. It's bigger numbers. They're easier to finance because it's based on the income, not the individual. It's easier to raise capital once you know what you're doing. It's easier to raise capital for those types of deals because a lot of people understand multifamily. It's done well in recessionary times, including during the pandemic. The multifamily sector did very well, and there's good assets in good areas, so it's a good long-term play. People need somewhere to live, and it's a high barrier to entry. It's not easy to build multifamily properties. You can only build so many at a cost that makes sense. So buying an existing asset is like buying a business. You're buying an existing business that has income in place. So you're just coming in and enhancing that asset, or you're just buying income, and it's an annuity. So you can do it yourself, or you can invest in other assets. So it all depends on what you have time to do and what your desires are.
Mm. Now, for the people that are actually, already into, apartment investing, as long as they buy the property where it's not over leveraged, would that be accurate? Were they buying a property where, the leverage is not risky? And let's talk about the price per unit of an apartment building. For the people that don't know, can you explain to the audience in layman's terms, what is the price per unit for an apartment building that is 50 units or 200 units or 300 units?
Yeah, that's going to vary, across the board. So in terms of leverage, lenders are only going to let you borrow so much. So generally, most people are going to borrow as much as they can, unless, you'd rather raise more capital and borrow less. But generally, most lenders aren't going to let you borrow more than 70%. Initially, once you get some experience, you can get that up to 80%, sometimes 85. And then for development financing, you can get up to 95% for some products with HUD. But, leverage, you want to make sure that the asset meets certain, well, again, the lenders are going to make sure it meets certain debt coverage ratios. In other words, you have to have enough income coming in to cover the debt service. Plus you're going to have reserves for the expenses and things like that. So that's going to take care of itself in terms of qualifying uh, what it is you're taking over. And as far as the price per unit, that's going to depend on the asset, the market. I mean, that's all over the board. I mean, you could find stuff at 20, 30, 50,000 a unit, or you can go up to $1 million or more a unit. It just depends on what it is, where it is. But, an average class B, class A, class B, suburban style, 200 to 400 unit apartment is generally going to be 150 to $200,000 a unit right now. That's kind of what that average is. If you're building it new product's going to average you about 165 to 175,000 a unit. Now, again, that all depends, right? If you're talking about 2 bedroom, 3 bedroom, 1,200 square foot, 1,200 square foot type units, or you can get into micro apartments or, studios. You go into New York, Manhattan, it's going to be a different animal, different economics. It could be 3, 4, 500,000 units. So really all depends.
Mm. Wow. Now, for people that are, basically the entrepreneurs, and we know, apartment investing, whether it's mobile homes or, mobile parks or land development or real estate development, or they want to get into, single family homes, or they definitely want to get into strip malls. How do you feel about the commercial real estate side in regards to strip malls? And how do you feel about triple net leases on that commercial building?
Yeah, so retail strip centers can be a good investment in the right area. I mean, everybody needs the Starbucks and the Chipotle and the nail salon and hair salon and all that, right? So
Mhm.
those can be good assets in the right areas. So if you're looking to take something over, you want to figure out how can I enhance it and increase the value. If you're looking to develop that ground up, what are the needs in the area that you're looking for? So you have to find where the demand is and fill that demand. Remember, back to your best piece of advice, probably the best piece of advice I've ever been given was, find where there's a problem and solve it. That's where your opportunities are created. So when you think about real estate development, you're solving problems. You're providing a use for a demand in the market that's already there. So you want to try to go to these markets and figure out what's missing. And maybe I can provide something in a better location with better access, with newer tenants, something that's, not there. Maybe instead of Chipotle, you bring in a, Qdoba, or you bring in a Moe's, or, something like that, to give a little variety and diversity in the community. So that's kind of how that works. As far as triple net goes, it depends on what that is. From a developer standpoint, those can be really good assets to get in and out of. From an ownership standpoint, I don't like owning them because it can be risky. You have one tenant. If they go out, the use can be obsolete for somebody or something else, and you're stuck with a liability. You have to maintain it, take care of it, all that. But from a developer standpoint, those are great assets because there is an appetite. A lot of people like triple net lease, like a Walgreens, CVS, banks, grocery stores, auto parts stores, Dollar General stores. I mean, there's a lot of different triple net lease product out there that people like to own, that have good balance sheets backed by good companies. But as we've seen, no company is safe ever in this environment or this economy. So I don't like to own them, but I don't mind building them and selling them because they can generate some really good profits.
Mm, absolutely. Real estate is, big business. And if you do it well, the profits can be, astronomical for you and your family and for your team. Because actually, your team is your extended family when they're helping you build your real estate business or any type of other endeavor that you are actually involved in.
Yeah.
Now,
And, just to give you an example, your average little, like a CVS, Rite Aid, Walgreens, type pharmacy that you see on a triple net, single tenant triple net deal, if you build that, get it finished and sell it as a cap rate, you can make about $1 million as a developer. Same thing with those little strip centers, but it can take you a couple years from the time you start, get it done, get through it, sell it, and it takes a couple $1 million to do it. So those little strip centers, 10,000 to 12,000 square foot, multi-tenant strip centers, like I talked about, where you have a Starbucks, a Chipotle, hair salon, pet store, something like that. It's going to cost you, a couple, $2-3 million to build it. But when it's done, built, and leased up, you can sell it and make $1 million. You can sell it for $4 or $5 million. You can build that land, and this is land building all in. You can build a pharmacy type triple net, single tenant triple net property, and you pay 3, 4, 500,000 to $1 million for the land. It's going to cost you $1.2 million to $1.5 million to build the building. You can sell it for 3, 4, 5 million, so you can make $1 million on those. Depending, it all depends on the market. The real estate is your biggest variance there because property is going to trade for different prices in different areas.
mm, wow. Now, with the real estate holdings that you had in your asset column currently, did you take a hit during the COVID pandemic?
No, the COVID didn't affect values of real estate
Mm,
like it did back in 2008 and 9, but some of the income properties took a hit, like retail, office, those types of things. But
mhm,
I don't own that kind of stuff. I build and sell. I'm a merchant developer, so I don't hold property. I build it, get the value created, and then I sell it. But anybody who was owning hotels took a beating. Anybody who owned office or retail in most areas took a beating, and some multifamily in some cities were really down. But across the board, multifamily did well, self storage did well, mobile home parks did well, those types of things. But yeah, there was a lot of income damage to properties, which ultimately affects the value, but nothing like we saw in 2008 and 9.
mm. Greg, I appreciate you coming on my show today because the whole premise of my show is to educate entrepreneurs and business owners that they can live the life that they truly desire, but they have to be open to these important principles. So I don't like what I see what's on the news, so I create my own news.
That's the way to do it. If you don't like what you see in the world, be what it is you're looking for.
Absolutely. I love what Gandhi says. Gandhi says, be the change that you would like to see in the world. And that's what I'm doing. And that's what you're doing among, other entrepreneurs that's actually, changing the game and conveying real, true, powerful information that's going to help out the older generation as well as the millennial generation. Because it seems like they're really, really hungry right now about, learning and about how they can actually make money in the real estate game.
Well, it's like I say, you're never too young, you're never too old, but you can be too late. So, get started, educate yourself, and take action on that education. And listen to podcasts like this. Thank you for what you're doing. That's awesome that you're taking time to educate people and to help people. That's a wonderful thing to do.
Absolutely, absolutely. And podcasting is actually taking over the radio stations. If I can just go to a podcast and listen to, undeniable content for an hour, I'd rather do that instead of being interrupted by radio commercials.
Yeah, YouTube podcasts. I mean, that's the future of information right there.
Mm. Now, you mentioned that powerful word, YouTube. Let's have a dialogue about YouTube. Now, I know a couple years back, Google bought YouTube for $1.6 billion. So video is hot right now. Can you explain to the audience the power of using video? And should entrepreneurs and business owners use video to expand their brand?
Oh, absolutely. Video is number one right now on all platforms. And I know there was Clubhouse that came out that's straight up audio, and that was popular during the pandemic, but that's fading. Video is supreme. Video always will be supreme, and YouTube is it's such a huge platform. And if you're not on video, you're missing out on a lot of opportunity, because it gives you a chance to build a relationship with with your investors, with your clients, with your customers, your vendors. It gives you a chance to build those relationships before you ever actually engage or do business. So yeah, you're missing a huge opportunity if you're not doing video. It's where it's at.
Absolutely. Video is like the big gorilla right now. And people's not
Yeah.
even going to the yellow pages anymore. It's like you tell people exactly what you do, they just going straight to Google and see if, oh, okay, this is what Greg does, or this is what Arthur does, or this is what any entrepreneur does. It's like people want immediate access to you, either through your website or through a video. And video, like you were just saying earlier, gives you a chance to build rapport and develop a relationship with your raving fans from all over the world.
I love you said guerrilla. One of the first books I read was Guerrilla Marketing, and that's one of the best marketing books out there. And back in the day when I started, there was no YouTube, there was no internet. It was phone book, newspapers, signs, flyers. I mean, that's how I built my business: banners,
Mm.
sponsoring sports teams. So in order to be everywhere, that's what you had to do, and that's what I did. And I blew my company up. That's how I took it from 250,000 to 30 million so quickly, and how I built and scaled all the companies I've done is through guerrilla marketing. You got to be everywhere. If nobody knows you, nobody can do business with you, and you can't serve anybody. You got to be known. You got to be out there. And the best, fastest, easiest, cheapest way to do it right now is through video and social media.
Mm. Absolutely. That's what's in right now is social media. So Facebook, Instagram, LinkedIn, YouTube, and Facebook owns Instagram. And even with the power of email marketing, all these are delivery systems. How can I consume your content, and how can I grasp it fast enough when it get into my brain, and then I have to basically execute the information. That's what's happening right now. So I let my driving time become my learning time.
Absolutely. Automobile University.
Greg, let's talk about entrepreneurism. Now, the word entrepreneur means entreprendre, and it was a Latin word, and it was invented in the 15th century in France. And a gentleman by the name of John Baptist, he invented the word, and over 300 years later, that word still exists, which is entrepreneur. So entre means between, and ponder means to take. So it means to take lower productivity and increase it to higher productivity. Can you explain to the audience, how are you increasing your productivity in your current real estate business?
So, entrepreneurship also is, taking risk for reward to create opportunities in the marketplace and solve problems. So for me, it's all about leading, delegating, motivating. So I have teams that, I've scaled through others. So in order to be successful as an entrepreneur, you have to be able to lead, delegate, motivate, and grow and scale through leverage of others. And if you think about like Robert Kiyosaki in The Rat Race, you ever read Rich Dad Poor Dad?
Yes, absolutely. Actually,
Yeah.
I'm real good friends of his CPA, Tom Wheelwright. He's been on my platform a couple of times.
Okay.
Mhm.
So if you think about the rat race that he talks about in the book, and everybody knows what the rat race, you're just you're just running on a treadmill, right? Running, or the hamster running in the wheel. So what I
Mhm.
do is, I have a bunch of hamsters running the wheel for me. So
Mhm.
that's the easiest way to think about how to scale as an entrepreneur and how to be more efficient and to grow and scale an organization. It's all about people. People are your most valuable resource in any company. So it's all about helping people succeed, helping people better themselves, improve themselves, so that together you can improve and solve those problems you're trying to solve and make an impact on the world. And again, YouTube, right? The bigger problem you solve, the bigger opportunity there is. Google, started out as a little search engine, and look at anything you want to know now, you Google it.
Absolutely, absolutely. Social media has changed the game, but I do like offline marketing as well. How do you feel about offline marketing, and what would be your thought process in regards to what are your thoughts on organic media versus paid media?
So organic is getting so offline. So that's a couple of different things there. So offline depends on the business, right? Depends on what business you're in, who your customer is, and all that. So some businesses offline works better than online, and in some areas and some demographics. So it really depends on what it is, where it is. As far as organic versus paid, offline organic would be networking, right? So you can network, you can volunteer, you can contribute and do those things. That would be an organic form of offline marketing versus paid. You put up banners and sponsorships and ads and signs and things like that. So if you take this to the online world, organic is exactly that. Organic, again, that's going to depend on your networks. In order to build your organic reach, you have to get out there and network. You join groups on Facebook, LinkedIn, you post content consistently, and you keep it out there, and you ask people to share it, and you just continue to add value and bring value to the marketplace. But you have to stay on it and continue to grow that organically. Paid ads is the easiest, cheapest, quickest way to reach somebody online. It's very inexpensive to run Facebook ads, YouTube ads. LinkedIn's a little bit expensive, but paid ads is where it's at. That's the easiest way to reach people. People like it, because you're putting something in front of them that they need, that they may not be thinking about, and they see your ad, they're like, oh man, I need to go there. I haven't been there in a while. So out of sight, out of mind. So if you're a local retailer, staying in front of your customers on a regular basis for your, if you're a restaurant, weekly specials, if you're a retailer, your sales, if you're a service provider like a pet groomer, hey, don't forget to bring your dog in, whatever it is, you just stay in front of people, top of mind awareness. And if you're doing professional services, again, the marketplace needs to know who you are, what you have to offer. And the last thing you want to be is a secret in your community.
Mm, I agree. It's all about supply and demand. And if the marketplace is craving for the information that you can provide them, then you're going to be in business for a long time, because happy customers are loyal customers. They keep coming back to you wanting your products or your services.
Yep, absolutely. It's all about raving fans.
Greg, I wrote down some powerful words. 10 is the highest and 1 is the lowest. So you can rate them in your own influential way. Are you ready?
I'm ready.
Accountability.
So 10 being the highest, obviously.
And 1 is the lowest on
Okay,
rating the
yeah,
word.
10.
Perseverance.
Yeah, 10,
Value.
10,
Intellectual property.
10,
Real estate development.
10,
Dickerson International.
10,
Marriage.
10,
love,
10,
financial literacy,
10,
income producing assets,
10,
integrity,
10,
respect,
10,
learning,
10,
reading,
10,
building great relationships,
10,
health,
10,
wealth,
10,
money,
10,
impact,
10,
legacy,
10,
wisdom,
100 times 10,
honor.
10.
All right, that was good. That was real good, Gray. Yeah.
Well, and the theme, if you saw that, they're all important. There are no shortcuts. It's all important. And you can be a 10 plus in all those levels. And, you could take some of that, above others. And probably the most important thing is faith, right? You got to have that. And you got to put those things in perspective. But everything is important, and everything that you listed are the things that you have to have if you want to be successful in every area of your life. So you have to put them all at the top, and you have to give them all equal consideration.
I agree. Now, you basically educate entrepreneurs and real estate investors all over the world about how they can actually make money in the real estate game. Now, do you actively own apartment buildings today?
Not right this second.
Okay. All righty. Now,
No, I build them and sell them. I renovate them and sell them, that kind of stuff.
for the entrepreneurs and business owners that are actually owning, 4,000 or 5,000 units, and they actually want to basically, take their real estate company public, what advice would you give them in regards to taking their real estate portfolio public in regards to owning a lot of apartment deals? And I know that, active investors, they don't buy, you know, they basically don't buy uh, apartment deals because it has assets. They buy basically the whole portfolio because they have earnings. What advice would you give people that are thinking about taking their 4,000 or 5,000, 6,000 units and they want to take that real estate portfolio public?
It's a double-edged sword. It's expensive. It's time consuming. There's a lot of regulation. The decisions get taken out of your hands. It changes the dynamics. It can be great because you can raise capital to buy more assets and grow and scale. But at the end of the day, you end up with a board of directors that you become accountable to, as well as the SEC, things like that. So it's a big decision. And, for some companies, it makes a lot of sense. For others, it doesn't. It can be a good exit strategy, but there's limitations on how quickly you can exit when you take a company public. So a lot of different options there. So each individual is different. Every portfolio is different. Every situation is different. But something that requires a lot of research, a lot of due diligence, and the right type of assets in the right market. Not everybody can take everything public.
Now, with your brand, Dickerson International, are you thinking about taking your company public going into the future?
No, for me, I've always been private, and I always will stay that way because I make the decisions. I have the ultimate say. When you go public, those things change. So I'm not interested in taking, companies public or doing anything like that. Now, I might help, another company that I'm looking to exit, but not my legacy institutions that I'm building. And Dickerson International, the ultimate goal with that is a school of entrepreneurship to help people in all types of businesses, all types of real estate investing, that continues on long after I'm gone, educating people all around the world. So that's the vision for that entity.
For the entrepreneurs and business owners that are thinking about syndicating real estate deals, should they develop a team to syndicate their deals? And should they get involved with REI, real estate groups, that can help them facilitate that dream?
Yeah, I mean, I think everybody should network, get involved in real estate groups and meetups and things like that to learn, grow, build your network, find out what other people are doing. You know, the team is up to the individual. When you say build a team, what does that mean? Are you partnering with people? Are you hiring people? So everybody's different. Everybody has different abilities. So for a lot of people, partnering is the way to go. You fill your weaknesses with the strengths of others. So a lot of people go that route. For me, I didn't partner. I hired people. So I hired out my weaknesses. I knew what my strengths were. I focused on those, and then I filled in the gaps with my weaknesses. And I hired people that were smarter and better than me in my businesses and all my companies. And I do the same thing in my real estate developments. And I know what I like to do. Like I don't like to hold property, so I build and sell. I buy and sell, build and sell. So I don't hold anything long term in terms of property. Those types of things. So it just all depends on the individuals, their goals, what their talents are, and things like that. But at the end of the day, you have to have a team, whether they work for you or not, whether they're partners with you or not, because you need lenders, appraisers, attorneys, inspectors, property management. So it takes a lot of people. So you have a team, irregardless. But a team within your own organization is a different thing.
Mm. Now, you talked about, like you said, it all depends on the relationship you want to build in regards to a partnership. You have people that have, LLCs, they have S corps, they have, C corps, they have LPs, limited partners, they have, general partnerships, which I don't recommend a general partnership. For the entrepreneurs and business owners that are thinking about really taking their real estate business and formulate it as a structural wealth creation unit, should they develop a LLC in regards to, developing their own income producing assets in regards to real estate?
So everybody's situation is different. You need to talk to your accountant and your attorney about the best legal structure for you. And it all depends, again, on where you are, where the assets are, what state you live in, those types of things. The assets generally will be put into an entity in and of itself. And most lenders are going to want that local to where they are. So if you buy an asset in California, then generally the lenders are going to want you to set up an LLC in California that owns that asset. And then you will have members in that. You'll have your general partners who are going to be the sponsors of the deal, and you'll have your limited partners who could be investors. So a lot of different, things there in terms of structures and how to operate and what to do and, things like that. And then you have an operating entity that's going to manage all the investments, developments, that kind of thing. So that's a different entity that becomes the general partner in your local investments. So that's a complicated question that has a lot of factors and variables. So that's something that needs to be discussed with, your legal team.
Wow. Now, what mistakes are you actually seeing throughout your career that active in real estate investors, as well as seasoned investors and people that's just, having, 10 apartment buildings under their asset portfolio? What mistakes are you seeing that active real estate investors are making in this business model, in the 21st century business model?
Either overestimating, things and underestimating things, overestimating income and values, underestimating expenses and roadblocks to drive value on properties, overestimating and underestimating market conditions, things like that. So, those are the biggest mistakes people make. Everybody gets, sometimes too focused on the end game and the ultimate goal, and they lose sight of what's in front of them right now in terms of what they should be paying, how to turn the asset around, those types of things. Not having enough reserves, not planning for emergencies, things like that. And it just boils down to you don't know what you don't know.
Mm. Now, I know that the lender is your best friend in regards to people owning apartments. And, they basically want to make sure that, you can hold your own weight, so to speak, and you won't be quick to sell that apartment investing if you're thinking about a long-term play. Now, I know a lot of investors where, their lenders are basically, Fannie Mae and Freddie Mac. Now, 90% of the bank's loans are sold to the secondary market, which is Fannie Mae and Freddie Mac. Now, picture this in your mind. And what Fannie Mae and Freddie Mac do is they package that loan money up into what are known as government insured securities. Should entrepreneurs and business owners just work with Fannie Mae and Freddie Mac, or should they just work with other banks to finance their deals, or should they just really, start building relationships with hard money lenders?
Yeah, it just, again, that's going to depend on what they're doing, what type of assets that they're after, things like that. The agency lenders are better for, bigger multifamily properties, and you want to get agency experience as soon as you can because it's a requirement to do bigger deals. It's non-recourse debt. It's easier to get. It's low interest rate. Banks are going to be a little bit more expensive. They can be a little bit more difficult. They're going to want personal guarantees. Hard money lenders are going to be expensive. They're going to be the easiest, but they're going to be expensive and the most punitive to deal with. So hard money is good for getting in and out quickly, flipping, that kind of stuff. That's not a long-term, you don't want long-term money there. You're better off raising private money from investors than using hard money for anything, even if it's quick. Banks are great for development deals, those types of things, smaller deals, different types of commercial properties that the agency lenders don't do, and big multifamily properties. Even small balance stuff, agencies have what's called small balance loans that are good for people that are getting a multifamily game to start out. So they have less stringent requirements for small balance loans and things like that.
Mm. Now, for the entrepreneurs and business owners that are thinking about, purchasing, let's say, 200, 300 acres of land, what advice would you give them in regards to owning land parcels?
They just need to understand what they're getting into, and what the end game is, because, generally you don't want to buy land until you get approved for what it is you want to do. So it just depends on what your end goal is, what you think you can do with the property. And, if you're going to buy it and hold on to it, you need to make sure you're okay with it as is, whatever the use is currently, that you're okay with that. But you never want to buy anything until you know what you can do with it and you get all your approvals.
Now, earlier during the show, you talked about delegation. Now, I know the minimum wage of a millionaire is around $524 an hour. So I always tell my audience, what can you delegate for $524 an hour? Or you can go way beyond that. What can you delegate as within your current budget? How important it is for entrepreneurs and business owners to delegate tasks out that they're not currently good at so they can just focus on increasing their top line revenues in their businesses.
Yeah, it's the number one thing you should look at. So that's the first thing I have everybody do that I work with is, if they don't have one, an office manager slash bookkeeper slash marketing assistant slash administrator slash. So you want somebody to take all of that administrative junk off your plate so that you can focus on the most important thing in entrepreneurship, which is generating revenue. So whatever those revenue generating functions are in your business, if you're the one doing it, you need to be focused 100% on that, and then hire everything else out or sub everything else out so that you can grow and scale and focus on your strengths. Again, focus on your strengths, hire out, subcontract out, partner out your weaknesses so that you can grow and scale, the sweet spot.
Mm. Well, for entrepreneurs and business owners, they have to, develop their mindset of growing and scaling their current business. How do you feel about brainstorming groups? And should entrepreneurs and business owners develop their own brainstorming groups and get involved with brainstorming groups, whether they at a mid-tier level or at a high level?
Well, you should always want to get with people that are where you want to be ultimately, so that you can grow. So, if you're the smartest person in the room, you need to be in a different room. So you always want to find people that'll push you, that know what you don't, that can take you to the next level and that kind of thing. So, and then there's times to, network with your peers and give back as well. But for your own personal growth, you always want to be where the next level is for you.
Now, I see a fascinating map right behind you. So, for the entrepreneurs and business owners that are thinking about, let's just say they want to go to Dubai and they want to, do some real estate development there. What advice would you give them in regards to developing real estate acquisitions in Dubai? And I know that, Donald Trump and his team, they actually, purchased a lot of land in Dubai. What advice would you give them in regards to cornering that market?
Yeah, I got the whole world behind me here, and I've got a hard stop here in a few minutes. We're gonna have to wrap up, but you know, anywhere in the world or the country, that you're in that you want to do something, you need to, research it first. You need to understand what are the laws, what are the rules, how do they handle property, what are the property rights and ownership.
Mm.
That's the first most fundamental thing. How does the financing work? How are you going to get the money? All that kind of stuff. So there's a lot of logistics that go into investing, especially out of the country. Um, First and foremost, before you think about even starting to invest there. And then obviously you want to go visit, put boots on the ground so that you understand the culture, what's going on, how it works, what are the, as far as construction techniques and processes, those types of things. And, a lot of people rushed into Dubai. Dubai is having one of the biggest real estate corrections in the history of the world right now. In
Mm.
fact, Dubai itself is in default on a lot of their properties. So, it sounds good sometimes,
Mm.
and everybody jumps on the bandwagon, and all it takes is just a little bit of a change, to really create some problems. So it'll be interesting to see how that works out. But you got to do your homework. No matter what it is you want to do, you got to do your research. You need to understand what it takes to do business anywhere. It could be the city, county, state, country, whatever it is.
Mm. Can you explain to the audience exactly where they can find you?
Yep. So gregdickerson.com, all my information is there. And yeah, I've got a YouTube channel, podcast, LinkedIn, Facebook, it's all there. So gregdickerson.com.
Greg, I'd like to thank you once again for taking time out of your busy schedule to educate me and the audience worldwide about the power of real estate development and the power of real estate investing. I gladly appreciate it. You are a gift from God.
Thank you. Thank you, Arthur. It was great to be here. And thank you for what you're doing.
I appreciate you. Do you have any last pearls of wisdom for the audience?
Yeah. So be a seeker of wisdom, seek first to understand and figure out how you can serve others. The bigger the problem, the bigger the opportunity.
Absolutely. All entrepreneurs and business owners are solution driven, and they basically are solution partners. So to everyone that's listening and watching right now, follow the phenomenal Greg Dickerson. You had the passion that came through his voice on my show today. He broke down layman's terms about education is key if you want to be successful as an active real estate investor. He talked about real estate development. He talked about the true definition of entrepreneurship. Go to his website, gregdickerson.com. That's GREGDICKERSON.com. He has phenomenal content that could take your real estate business to the next level. But remember, you have to implement what you learn. Knowledge is not power. The implementation of knowledge, that's what makes it become powerful. Greg, I had to get you to come back on my show so we can get more in depth about these wealth building principles.
Yeah, we'll have to do it again. I enjoyed being here.
So to everyone that's listening and watching right now, remember that the strongest asset that each and every one of you have is your brain, and what you think about and what you take action on that will become your reality, and your mentality creates your reality. May God bless each and every one of you, and bye for now. Thank you, Greg. I really appreciate you conveying value to my audience about the power of real estate development and the power of real estate investing.
Yep. Thank you.
And bye for now. Have a pleasant day, everyone.